Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. If you're in the Bookmap Discord TraderLab community, remember you need to verify your email, your Discord account email, in order to access this live stream and other audio, etc., that is in the TraderLab and also elsewhere in the Bookmap Discord server. And there will be a link published soon if you are interested in availing yourself of, continuing to avail yourself of these no-cost opportunities. Let's take care of business here. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. It is based on structured trades that are available to everyone in the Bookmap Discord TraderLab, as well as a library of webinars on this process and a community that's available to everyone at no cost. And again, if you're visiting in YouTube, thank you so much for stopping by to TraderLab today. Feel free to post questions if they're specific to the stream. Otherwise, anything you are interested in can probably be answered when there's a little bit more time in the Bookmap Discord TraderLab, and there is a link in the bottom of YouTube if you want to visit the TraderLab, take advantage of all the resources, not only in the TraderLab, but in the general Bookmap server. So, a couple of things we need to talk about very briefly, and that is the condition of the market. The market yesterday was what we call a neutral day, and a neutral day in market profilage is basically when the first hour's high and first hour's low gets taken out. And if you remember yesterday, it was just a huge rotational day. So we'd go up, make a high, go down, take out the low, go up, take out the previous high, this kind of thing. So it was just two-sided. And when you have two-sided battle like that, it is really a big consolidation. And often what happens with these is there's about a 30% probability we get the same behavior today as yesterday, and past performance not indicative of future results. You got to vet all of these, but that's a general thought process. And the idea is when you have two sides battling it out, one of these is going to win, and the compression or the volume that is created inside this compressed or big consolidation two-sided trade, whoever is wrong is going to end up getting squeezed. And if you look at today's behavior, it was very much two-sided. Now, we were leaning to the upside yesterday. I had targets up above, and I'll go over what those were. And then today we started out on the long side, and then it became two-sided again. And now the buyers are squeezing out the shorts. So we might say potentially the uptrend is continuing. So we'll take a look at those trades today, and also grab your pen and paper. I'm going to give you a couple statistics. And like everything, you have to vet these for yourself. So get your pen and paper out. We'll talk statistics and how you might use them. Now, the thing about the number one issue, or I should say thing that we want to try to be aware of, and that's what I just reviewed, is something called context. Context is the condition of the market. Then as the market opens and the participants begin to interact, our objective is to be able to try, and I underline the word try, to identify the developing context and then get in alignment with it. And then in the TraderLab, there's 60 PDFs of structured trades that you can download and reverse engineer. So when you recognize context, you might actually have a way to participate with it. And of course, the job of every trader is to see where their specific statistical edge exists. because some traders trade where they put a trade on and they hold it for the day. In TraderLab, there's other traders that are rocking and rolling and trading shorter rotations. This is where the work needs to be done to find not only where you have a statistical edge, but also a psychological alignment. Because some of us coming into this business, depending on how long you've been in here, may think it's a business of flip-flopping like a flounder on the dock, scalping. And what I've always asked traders, and I even had to ask myself back when I was a high volume trader, was why am I doing this? What was it fulfilling in me? Because I would have days with really significant profits, but I also, and cost, right? On other days where I did not have a profit, but I still had significant cost. So I realized what was happening, at least for me, is over a long period of time, even though I would see some large gross numbers, my broker was the one, and I didn't know why my broker was sending me gift baskets, So now I get the idea. So it's about cost, it's business. It's not about dopamine, adrenaline, and all of that. And that's something you need to identify for yourself. Why are you trading? What is it fulfilling? Now, the obvious answer, of course, is we're here for profits, but you need to find where that is. Where is your trade that gives you the edge? How much trading can you do and still be sharp cognitively? You see, those are questions. And if you haven't thought about that, write it down. It's really important. So here's some statistics. The probability and possibility in opening lower inside of yesterday's range. Here's the open. This was the settlement, so lower inside of the range. Yesterday's high is here. Yesterday's low is down below. Okay, so we're opening lower inside of yesterday's range. Here's some statistics, and you have to vet these for yourself. There's an 83% probability we get to the overnight volume point of control. Not much of a reach. Let me find out where it is. Just fell off the map. Oh yeah, it's right underneath the open. So that is right here. It's always nice when you can't see what you're looking for because it's there. Getting to the overnight mid, let me get this here, an 83% probability. Getting to the point of control, previous point of control, about a 70% probability. So we're opening right in here. This is what we call balance. And what balance is, it's saying is there's not much difference. In other words, between yesterday's retail price and the ETH retail price, there's just a couple points. That is really saying this is fair at the time. So we know we're in an area of fairness. Now, and there's more. There's a 49% probability we take out the first hour's high, and a 69% probability we take out the first hour's high. I think that's what I said here. So yesterday's high, not so high probability, overnight high, I should say, and first hour's high, wherever that is. Now there's a couple pieces here, more things that are pretty important. There's the first hour's high. This is called a single. It was a target. It was part of our targeting for yesterday. 22.5, and there's another one at 43. 32 is important. I'll go into why later. I think some of these are not accurate, and this up here. Have to look. Some of these get left, they're orphans, they get left on my streaming computer. So we're looking at a couple of things. So coming in today, and I posted this in TraderLab, that we were looking for two-sided trade, and that you should be patient and not take the first move. Because if the market opens and goes down, then and the sellers might be right, we don't know. Because yesterday we ran out of buyers at the high of the day. So the question becomes, are we going to push out the sellers? So the ETH high is here, yesterday's high is here, and we had exhaustion. So what I was thinking was, I'm just telling you, thinking doesn't mean, it's not prediction. Remember, thinking is possibilities and probabilities. I was thinking if we get the move up first, I got to get long, and then I've got to be thinking about this. And my target here. So this is kind of what I was thinking this morning, but I knew at overnight high, if I ran out, once I clipped the overnight high, if I ran out of buyers, then I could come back around and maybe come back in and rotate, stay two-sided again. So anyway, I hope that makes some sense. And if you have questions, please post them. I can't see them if you post them, but please do, and I'll do my best to get back. Let me just check a couple things here. Okay, great. How are we doing in YouTube, guys? Hope you're all doing all right. Today was a bit of a difficult trade. When it gets two-sided like this, it's very easy to get twisted in the wind. Trade management is key, risk management, and a loss limit. Remember, you're in a business. In our business, we don't make dollars every day. And there's going to be days where you're going to not have a winning day, obviously. That's just part of this business. The thing to remember about this business is it's a gaming business or gaming process. And that is not the next hand, not the last one. It's all of them over a large sample size. If the market and your plan are not in alignment, your job is not to get the dollars back. Your job is not to give more dollars away and then just have a loss limit and honor it. If you're not able to honor a loss limit, that is psychological. It's not business. So if you want to be in the business of trading, you need to understand how to stay in the business of trading. So let's go take a look. RTH open. Let's look. Now I'm looking at this and I'm going, this looks like it's going up, of course. But I also know I'm anticipating two-sided trade. So market opens. This is called VPOC migration. So I'm thinking I want to be long. So what do we have here? This is the opening swing low right here. Market goes up. Now, and this is the naked volume point of control, and this is yesterday's settlement. I know this is a retail price, and I know this is our settlement. So it's not unreasonable for us to come up, check here, and then rotate down because I'm anticipating two-sided trade and I have remember, overnight volume point of control is actually under the RTH open. So I know this is retail in the ETH. So the way this tends to work is if we can go up and come back, we can come down and come around. You know, we could, so two-sided. And I posted this in TraderLab. Anticipate two-sided trade. And by the way, I don't have any idea. I'm just saying anticipate it. So here's the opening swing low. Now here's the opening swing high. Where do we come? We come under. So I'm going, what's going on here? And that's quite frankly what's going on in my brain. What's up? Because I don't know. Wish I did. Don't know. Except I have this and this. Let me give you the statistics on this. 70% probability we get here. So we opened here. 70% probability we get here. You have to bet these for yourself. Past performance, not indicative of future result. 72% probability we get here. Now, the fact that it isn't that we get there and go south of the border. It's just that we get there. We could also just keep going, right? But this is how statistics help. So if I know if I got involved here, if I did, then I have this and this as potential obstacles for a reaction. That's all I can tell you about it. So let's see what happens. So I get my buyers, teeth start chattering. This is called VPOC migration. There's more volume here than here. This starts at zero. More volume here, so I'm seeing my buyer. Right here, I see my buyer, and I see absorption. Sellers are absorbing this guy. The buyers are above here. This seller in here now is not having a pleasant morning yet. Seller here. For this market to go down, it's got to take that out and that out, in my opinion. Again, targeting there. All it means, I do not have a long. I have a what's going on moment, because I know right here, if I can't keep going and I come back under here, then we have the potential to come down. So let's watch it. So long, 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 looking great, going to the moon. Seller is still underwater here. Buyers here going north. Watch. Now, right here, I see my buyers. I have 18 buy stops coming up. I only have one buy stop here. And I have 3 there. I call that stop divergence. Now, it's just a suspect here. I see a selling iceberg. I see the break. And what am I aligned with? This and this. I'm now under this. This suggests to me downside rotation. So here I'm going, should this be a short? This runs through my head. But I had posted in the TraderLab, be patient this morning. Do not take opening trades until you have a structured trade. So look what we're doing. So we took out this, which is the opening swing low. Here, I guess it was, kind of here. But now these buyers are out. So now I'm coming down and I'm going, well, now what? And this is my high probability target down here. So now I'm waiting. I don't know what's going on. Now let's look at something here. What do I see here? I see a seller. That's what this delta bubble is here, that red bubble. And I see a green box. This is absorption. This is telling me that even though this thing is going down, 55 sell stops come out, but there's a buying iceberg. So this iceberg is absorbing the sellers and the stops. So this becomes material. Now, it's material only that the antenna starts getting cranked up a little bit. Let's watch here. So right here, there was a buyer. The sellers are underneath the buyer. So right here, there's no buyer. So the sellers here are still in control. The buyers take a shot here. No bueno. See you later. We'll send you a ticket. Catch you later, alligator. So I get more sellers here. So I'm looking at this and I'm thinking, well, we're going to go here. That's what I'm, quote, thinking because of the what? Statistic. What is the statistic? 83% probability I get here. So I'm going, okay. And I'm looking at this thinking I'm looking for reaction here. And this is what the profile is about in the auction is where might we get a reaction? Levels. And nobody knows. Here's what I know, though. Sellers were here. Buyers got absorbed. Buyers were here. Sellers absorbed them. They're under the bus. Pullback. Can't get above here. Still under the bus. The buyers. Sellers in control. Having a wonderful time. Let's watch. Buyers here. Buyers here. So far, no good. If I get sellers below these guys, then they're still in control. Let's watch. VPOC migration. I'm going to label this. This is the language of the market. Remember, I don't use indicators. I just try to read it, and it's like speaking a foreign language. And sometimes it's not very clear. In fact, it's always nebulous because it's always maybe. So this says, when this shifts down, this is too high. I mark it, I call it a variable high volume node. And here's what it says. Let's talk the language. It says the volume that was here, which is like shopping, like, oh, I'm not paying that. Yeah, but it's on sale. Back here, you see. So this is a consolidation. This here. So up to here, back to here. If you look over here, you can see a consolidation. That's what it looks like in volume. Now there's fractals inside of here. I mean, there's more. This is a consolidation also, but I'm going to leave this for now. So we come down, I get VPOC migration. This is saying at the moment, very important, this is too high. This is the new price, and then there's two possibilities here. Remember, statistic is right there. We can continue going down. If we push off, keep going down. If we push the other way, then it is going to say the opposite of this. If this is too high and I come down here and I push off, it says possibly then this is still too high. If I go the other way, it might be saying this volume over here is too low. And then it will take us back here. So we'll see. Let's watch. There's my break high. This sets up a long in the TraderLab. Let's watch it. Now this is hard to get into right here. Let's look at this. So right here, you get your buyers. These guys are stuck, okay? There's your buyer. Now, the idea is we want to get here and then out there if we can. So how do we do this? Well, when you see this, you have choices. You could be long here, stop under here, or you could wait for a pullback and try to get long for the continuation. Let me show you another way into this. This is called VPOC migration. Right here is a long in TraderLab. Let's look at the language. If this is too low, this is the same as what's above us. Huh? Just keeping a little bit eye on the market here too. These IBF trades or mean reversion trades, they're not recommendations. So if this is too high and this becomes too low, we can go back and check what was too high. That's why when this breaks or here, subject to your plan, it's along to there. And by there, I mean like a tick or two in front of it to scale. Then we can pull back here. We can come back here or whatever. Now it's, and this was too high in a fractal. Do you see this line right here, right there? That was too high. I'm going to throw a line on there so we can remember where it is. This is trading in fractals. So the fractal, I got to put a little box around this so we remember where it is. We just want to see structure, okay? Let me just get this in here. If you look, whoop, get over here, close enough. If you look at this, this is what's called the distribution, and it's just terminology really for consolidation. When you have volume dry up, basically it says, I'm not paying that. You go to the store, the price is really high. Somebody always buys it, but not everybody will. Less people buy it as the price is perceived to be too high. If it comes on sale and in this store or this shopping experience, which is a consolidation, all it is a rotational trade. The high volume is there. If the high volume is perceived to be too high, we can break away from it. And if we break away and come back to it, it can set up a potential short. This here could have been a potential short, but for me, no. It was just hasta la vista, hang on, because we might have just come down here and then come right back. So for me, I'm thinking longs. So, and it could come out either way. So here's a pullback. Watch. And what's support? Here. So here's your possibilities. Long here, scale here, stop under here, pull back here. This is called the variable high volume node. It is the retail price. And what does this tell us? Remember language. This consolidation, this retail price was too low. If we come back to the store to check the price and it's still too low, we can buy it here. Sellers are here. We see absorption. There's a buyer here, and here these sellers were trapped. So I had my buyers activated here, and I get my buyers activated here. This is another long in TraderLab. And remember, what was too high? It was here. That's why we scale. What does this tell you if we come under here? This is a long. Where do we have to get through? We need to clear mid and VWAP. And then where to? Back here. Then where? Out the top. Does that make sense? So that's the first sequence of longs. And there's more. Really? There's more? Yeah. Yesterday's high. And there's more. Oh yeah, this. This was our target, one of our targets from yesterday, 21 or 22, or I think it's 21-ish. This is posted in TraderLab. So let's watch. This is hold on, 5620. Got to look at what's at 5620. This is the target that we're going for. So let me look at this. Yeah, this is another nice trade in TraderLab. This is microstructure here. Now this is where you have to determine the fractal. At the top of the stream, I talked about fractals, and I said, there's some traders are going to put a trade on and take a nap. We have other traders, and I'm thinking of one in specific in the TraderLab. I'm not going to mention names. And then there's other traders who are going to manage their trade and see this and then get out of the trade and then look to put it back on because we have other structured trades. So let me show this one to you. And before I do, just so you know, before I do, I'm going to mark this, put a little box around it, and if you have questions, I'm going to come up for oxygen. And thanks for your patience. This is what counts right here. So how we doing so far, guys? Remember, if you're in the Bookmap Discord TraderLab, if you're not able to post or access this stream in real time, be sure that you verify your email. It's our effort to reduce the riffraff and the spam and to make it a first-class experience for you. And that's why we're doing it. So you're already registered with Discord. You're not doing anything different. You're just verifying that you are you. So it's for the benefit of everybody. And if you're in the Bookmap Discord TraderLab in YouTube, there is a link in the bottom of YouTube. You can come over to the TraderLab and have, I think, potentially a first-class experience. Download the 60 PDFs of the structured trades I'm discussing. Join a community of serious traders. It's about building out the business of trading, understand the psychological impediments, and there's a library of webinars available exclusively to Bookmap Discord TraderLab participants, as well as a lot of other education. And even if you're a Bookmap subscriber, there's the mentoring and coaching in the Bookmap Academy, and even the opportunity to get free Bookmap. There's a lot of things going on, plus streaming on stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap. I have to mention that because to be competitive in this business, it's very important, at least what I have found, not to do what other retail traders do. Most retail traders are depending on indicators to kind of tell them what's going on. The reality of trading is it's not an indicator plug-and-play based business with the right mix of indicators and the right quote time frames. That is what retail traders do. And the sustainability for retail traders is miserable. Over 90% fail. I think we can all learn from our experiences, but to anticipate having a different outcome, I would think statistically is not highly probable. I've been there, done that, and I'm going on 45 years of trading. And I did it early on in my career, and then went from that to trading systems because I was managing dollars. And then over time, kept coming back and waking up doing the same thing with the same, expecting a different outcome and getting the same result over time. So even though I could curve fit or tweak something, it would always break down. So I was always chasing the ball from behind, not actually being in real time with it. Now, when I started, we didn't have the tools we have today. There was no order flow, there was no volume, there was no domes, there was none of that. But the fact is, over time, you can try to fix something that actually you believe in, but your beliefs might not be in alignment with what this business is. This is a business of randomness. It is a gaming business. It is not a prediction. And most of us are wired to think that this business is, let's just predict what's going to happen. Next trade setting up. So here's our short or exit, and this is what you have to vet. It's all time frame specific. Now, and here's why it's a short or exit. And I'm not saying it's a short, I'm just saying it's a couple of things. It's either an exit or you just have your helmet on and you're not doing anything. So right here, we see the buyers. Now let's look what goes on here. I see absorption and I see a selling iceberg right here. So I've got buy stops, and you'll notice when there's a lot of stops going, the icebergs often are the sellers into the stops. The delta is representing the aggressors. Now, that's buyers, and there's buy stops that become market orders, so they show up in delta as an aggressor. Who knows, right? So, but I see the selling iceberg, and there's my absorption. I'm going, okay, they're absorbed. Now, the thing about this is when you see absorption, it is an indication of the opposite side taking these guys on. So we know that a seller shows up here. This is how you use order flow. Let's look. I get another buyer here. Now, there's buyers and sellers everywhere. These are filtered. I only want to see the cluster of bigger volume. If I see all the minutia, I'm telling you, my eyeballs will fall out of my head. So I'm more inclined for the broad stroke. I know what it means. If you understand order flow, you'll know what it means also. So let's watch. Right here in this structure, here, and actually this white line is where my volume is, okay? So this is my retail price. So right here, I get another buyer, and I have absorption. So what I'm seeing, and the sweep too, by the way, so stop sweep. So I'm seeing the sellers, and I know for the market to go higher, we have to get above this level. What happens, you ask? I see it come down. I see a buyer here, and the buyers have to take this guy out here. Now, this is Microstructure. This is triggering structure in TraderLab. And what do I see? Buyer here, no bueno over here, sellers, and now buyers are here. Here's my volume right there where it says HVN, right in this area. This is my high volume. In this consolidation, chop, 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 this is now potentially underlined too high. Sellers in control. This now is resistance. Let's watch. Buyers here. Can't get over these guys. This is either a short or hit the eject button. Now, next trade is called, we have another structured trade. Now, let's accept for a moment, and this is our target up here, don't forget, and we have another one above, but that's neither here nor there. We have another structured trade called V, and the volume point of control is here. In other words, volume point of control, which is right at yesterday's high, is saying this is the retail price in the developing daily time frame, the whole thing. I'm above yesterday's RTH retail price. I've gotten through yesterday's high. This is too high in the microstructure, but this is retail in the next higher time frame up. If I pull outside and this is above me and I have a target, I have a structured trade in the TraderLab called VWAP to VPOC. And let's take a look at it. So here's your choices. Out here, short here, to here, and to here. So, and this is subject to time frame. So you could be just out of your long, put it back on. You could be short from here to here to here, turn around, put it back on to here, out the top. That's the trade. Now let's see. You've got whatever your possibilities are. So let's look. We come down. Where's the retail traders keep their stops? Write this down. Think like a retail trader. Don't act like one. Settlement This was the retail price from yesterday. We are above it. Bullish. Next long trade here. We want to pick the stops out. Notice coming down 451 stops. Watch. 443 stops. Buying iceberg, and I'm going to go here, but I want to get these stops out. And I always recommend this in TraderLab. I don't call trades because everything is random, you know. Outside. Now, I actually want to show you something else here while we're doing this. This, if you look at this, you can see something that looks like this. This is the retail price, the volume point of control, and outside here is an outside edge. It's called the low volume node. And it could, remember, the market doesn't care, but this low volume, I want to show you this. You see how we came out here and we rejected it? This is like an outside edge. So the sellers got trapped here, and then we get our buyers. We come down here, and let's look. The buyers are activated here. This is an outside edge. That is what's creating what's called the low volume node. The way to think of these things is, again, retail. What's too low? What's too high? Volume dries up. If the sellers run out of gas, we run out of sellers. And then the buyers get activated. We come back to retail, and then we go up too high. The buyers run out of gas, and this creates rotational trading. If you think the trend is up, you're only going to be doing the buying. If you're a shorter term trader, you're going to sell, buy, do whatever you want to do. So we know this is an outside edge. That's what I'm trying to say here. So let's look. And where's the stops? VWAP in mid. Where's our outside edge? It's down in here. But we know there's stops here. The prudent thing to do is not to charge in here. I like to see what I call a stop pick. Here it is. So I see my sellers here, and I don't know. This is part of the joy, clueless. So let's watch. Right here, I see my sellers. I see a buyer here. I see what I call stop divergence. More stops coming down in here. And then I come over here, less. Divergence 101.5. Right there. This is a microstructure. You can see it there, that little node. I'm going to show it to you. I'm going to mark it so you can see it. And again, this is trading in fractals. Now, guys, I don't use indicators, and I understand what you're seeing. You might say, that's too fast, that's this, that's that. Yeah, of course it is. It's too fast for me, too. I only know in hindsight right here. And what else do I know? This is a structured trade in the TraderLab, and there's no precision. That's one of the joys of all this. There is no precision. There's only, I call it horseshoes and hand grenades. So we come out here, and I don't know where it's going, just so you know. This is my structured trade. I see my buyer. Now, I have a couple ways to do this. I can just jump on it here, put a stop here, scale here, and I'm looking to come out the top, or I'm going to wait for a rotation back. Let's just see what we get. Watch. So, too low, buyer, acceleration up. Where do I come? This was where the absorption was, right here. This is resistance. The buyers got absorbed by the sellers. So we know the sellers are here. So if you get long here, you need, of course, to cross this, and you need to be thinking about that for your scale ahead of it. Couple ticks. You would scale here, and then watch. When you break under here, this now is your support. So you have same concepts, resistance, support, 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 resistance, support. These are all the same. They're just fractals. So this is short time frame. This is short time frame. This is developing daily time frame. So if I trade in this developing daily time frame, which is a fractal, if you will, I'm going to use the shorter term time frames to lean on because I know what happened here. That's why we marked it. So if I get long here, I'm scaling ahead of this. And then I'm looking for that. Now, what do? If I hit the resistance and I have no buyers here, and remember the sellers absorb the buyers here, I can anticipate a reaction. Now I come back to what? Retail. What was this in the microstructure? Retail. What was this in the microstructure? Retail too high, retail too low. What's this in the developing daily time frame? Retail, higher time frame. Think Russian dolls. You know how Russian dolls inside of each other? Well, think of this like the big time frame. This thing, the big doll. And then inside of the dolls are smaller ones, but they're all the same. When I pull back here, I have the next possibility. I can, of course, come out here and get run over. Or, since I'm above the VWAP and I'm above the mid, and they're separating. The separation is suggesting directional movement, and it's all random. I can get long here or add and then scale here. This is our target, remember? So that's a target. Now, what? Let's look. So we get our target. Now, going to the moon, right? Before I go on, any questions? How we doing, guys? How are we doing in YouTube, guys? Please give a thumb up. Remember, you're all welcome to come to the TraderLab. There's a link in the bottom of YouTube if you're interested in the TraderLab community. There is no cost. And this stream is based on structured trading. And of course, like everything, it is not plug and play. This stream and the TraderLab is really about business. So if you're interested in the business of trading, that's where we're going with this. It is not the holy grail. It doesn't exist. There isn't that one secret indicator that's going to change your life. Unfortunately, been there, done that, and I haven't found it. And if you've been doing this for any time and you've gone to all the hotshot gurus, you've probably found out that maybe not so much. Now, of course, on the other side of that, if you have that and you are willing to share it, come on over to TraderLab. We all want to get better. Let's look at the microstructure here. This is a one way to do this. Now, the thing about what I do, my objective with TraderLab is to show you how the market works. If you can understand market mechanics, you can do something that other traders can't do. And that is you can narrate the market. You can break it apart into pieces or chunks. You can create a sandbox to operate in. There's a lot of things you can do. Now, let me show you what I'm doing. Now, nobody knows anything, right? Let's all agree we don't know. So, what is this doing here? Oh, you guys remember 24 was a big number on the way down. It was a target actually at one point. I left it on here. It's not a naked volume point of control. It was an area of behavior. So it's interesting to me because when we come back to even the previous areas, it might mean something. And there's also volume in this area. So I'm coming up. I see the sellers. And remember, nobody can pick the high. And again, if you are skilled with that, you should, again, you're invited to TraderLab. Buyers are here. Nobody knows, or I don't know anything. I just see it going up. And as far as I know, it's just going to keep going. Right here, but I'm seeing absorption. So when I see absorption, that's a seller, and the buyers are overwhelming the seller. So that suggests, oh, we're still going higher. I see a seller here. The buyers are overwhelming the seller. We're going to the moon, Alice. And then what happens here? Sellers, sellers. For this to keep going, I need to stay above these sellers right here. In other words, same differences here. Does the opposite. That then it's like that's like in the firehouse when the alarm goes off. Alarm is now going off in the brain. Now, two choices you have. You have when you have this, you exit, you blow the canopy off, and you hope your parachute opens. You wait for the retracement. This is hard because right when this happens, it's a FOMO thing, fear of loss. Oh, I'm going to give it all back. I'm going to bail out. We all have that emotion. The other part of this is now it could just go straight down to here or retrace and come back here. So and here's why this is important. If you know the sellers were here, the buyers were absorbed here, which you won't know until hindsight, and we have our sellers here, then if I come back, look at the mechanics of this, and the high volume is here. These buyers got thrown under the bus. The sellers are in control here. I come back here. This is order flow. And I test the volume right there. And there's a buyer, and I don't get above this buyer or these sellers. That is a potential short in the TraderLab. Or an exit, And we'll look where we come back. No buyers. Can't get above here. South of the border. Can you see how this might be useful? Miles, if you're having a problem, you can contact Dan. If you're in the TraderLab, you can go there and hit him up and he'll straighten things out for you. So this is a short or an exit. Now this is called VPOC migration. Let's watch this. Now let's remember where our resistance is. It is here. So we get this, we get VPOC migration. Right here, there's a couple possibilities. If this is too low, and let's go back and remember what this was over here. This is a long, remember? Bang. This sets up a short. VPOC migration. This is a long. Where's resistance? It's there. So if this is marching up, this is suggesting higher, okay? And to where, who knows? This is part of the joy. So this is a long, same as this, okay? Let me just take you a little back somewhere else. Same as this, same as this. This is VWAP to VPOC. This is a long in the TraderLab. This is a long. This is your scale. And we're trying to go higher. Now, VPOC migration. I want to show you something very interesting. And this gets a little advanced. I mean, TraderLab understands this, but this is, if you're new to the stream, you might not. This will seem maybe illogical to you. So this is resistance. This is a long. This is your scale ahead of this. If you're just sequentially going with the flow, we come up here. We take out the stops. I have sellers again up here, and I get selling iceberg. And no clue. I am the clueless. So right here, I see absorption again. It's the same thing I was seeing up in here was the absorption. The absorption. So the sellers are active again here. Let's look. Now, the other thing here, and this is part of the joy, we have something called the IB stat. That's the first hour. And in this configuration, there's about a 69% probability we're going to take out this. So for me, we're coming up to this 9:30. So this is Central Time. So 9:25. And I'm going, oh, this is great. You ever have that thought? I know this is too low. My sellers were absorbed there. This is now the retail price. And if this moves higher, I am looking for it to do what? Same thing as here, north. It moves up, north. Watch. Break. This is support, and now it needs to clear this right here. So I break low. This is support, and I'm looking for it to get above here and here. And as far as I know, which of course I don't know, we're going to take this out, the first hour's high, because I have a good statistic. So I'm, quote, I don't like to use the word confident, but I'm confident in my trading. What happens? Random. My confidence is in my trading process and my edge, not in predicting anything. That's long gone. What has to happen here? We have to clear this. I break. Right here, the teeth start chattering. I see my sellers here. They're absorbed by the buyers. I see my buyers, and I have the sellers above them here. I come back here. I need to get above these guys. See the logic? This is order flow. I break. And now I'm getting, I think the word is perplexed. I get my seller here. They're absorbed. They're absorbed. So right here is support. Now you see the sellers. Why is it support? They're being absorbed. That's why it's support. What about out here? Sellers are up here. The buyers were absorbed. Here, the buyers are absorbing the sellers. It seems kind of counterintuitive, but that's the only reason we went up. Otherwise, this thing would just keep going down. So the sellers are here. This is my retail price. I have broken below it, and I need to get above it. And I have a high probability statistic. I'm going to take this out. Right here, I have to get above these guys. And what do I get? Nothing. Buy nothing. Sellers. I come up. I'm now not getting here. I'm not getting here. This trade fails. Okay. In other words, I get taken out. And that's like, oh, that's very exciting. Now what happens? Follow the yellow brick road. The volume point of control shifts down. You see, you can narrate this. And what I always say in the TraderLab, this is a foreign language. But right here, we don't know at the time until we get under here and this shifts down. Hold on a second. Got to lower this. We still have two-sided trade. Too high. Now this is retail. Too high. I have a high stat here and the market is long. So right here, there's trouble here. Trouble. Let's watch. And where do we come? Come all the way back here. And what was over here? This will make it crazy. Welcome to crazy. This is trading. Wasn't this too low? Here. Remember? Right there. Variable high volume node. And where was the next location? It's right there. I didn't mark it. Sorry. Let me mark it. These variable high volume nodes, I had to make a name up for them back when I started doing this, which is a long, long time ago. And the reason I named it that was just it's high volume. And if you think of this as shopping, if this is too low, remember where we took our longs, right? Here on the pullback and here, and then we blasted off. The participants are saying this price is not available anymore. Now the market can do anything, right? we still had this statistic open, remember? High statistic. And there's my buyers. Well, if we come back to this price and the buyers think, gee, it's back on sale, I'm going to buy some more of this thing. Where is too low? There, there. So let's just move it over. This, and I see my absorption. Now I'm putting order flow, location. This is like real estate. And this sets up a long. Now, you might not be able to get on this thing. I mean, I understand. You have to have unconscious competence. Right here, now I've got alignment. This is what's important about this. Actually, I was on a short coming down into this, and I was looking for this. And of course, part of the joy of trading is, no, not so much. So I saw this, and I was actually looking for to take the stops out and then come back. So I had a short, but that's not important. The right here, I see the absorption, and I had my sellers here. These buyers were absorbed. There's a fight right here. I come down. These sellers are absorbed. I'm seeing the absorption. I'm seeing the icebergs. Now, nobody knows. So there's no prediction in this. I don't know. I have statistics. High probability I'm going to get here. I'm going, okay, I'm going for that. Take the stops out under the first hour's low. And fun facts to know and tell, that didn't happen. And right here, I don't know. Because here, just because there's a buyer absorbing doesn't mean they won't be absorbed and we get the stops and then we come back. So for me, the trade was take out the longs, and then if we come back in, get long. And that's a mean reversion trade, underlining the word mean. So anyway, I see sellers again here, and this is the last place the buyers got stuffed, and they got stuffed here. So here I got taken out. And you can see what's going on here now. So let's watch this thing. Oh, we came down already. So we took out the first hour's high. This sets up a mean reversion trade. See, we are in a two-sided configuration today, and it's the same thing we had yesterday. And I posted this morning in the TraderLab, and I'll take a look at your questions. Thanks for your patience. That there's a 29 or 30%-ish probability we're going to take out the first hour's high, first hour's low, and that we could anticipate two-sided trading today. Now, I can't tell you what's going to happen because I'm as clueless as everybody else. I try is to have scenarios. And then what I tried to do is align with what the participants are saying. That's the language of the market. This here is called the IBF. And now we take out the first, I haven't seen this. We take out the first hour's high, which was here, and look what we get. Absorption. The buyers are getting trapped up here. This is the IB. So if we have a structured traded TraderLab called the IBF, it's a mean reversion trade. Now, this could be challenging because the volume point of control is here, but we have two structures here that you can lean on. I'm going to show you a short. And this, again, is subject to trade plan. The other part of this is if you don't have a short in this condition, you just park. You know, you put the Maserati in the garage and you go have a slice of pizza. Sellers are here. I have buyers absorbing here. So this is a battle zone. When I see this in order flow, it's like they're beating their heads. It's like hedge. You know, you think about a battle, trench warfare. Bang, 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 bang. Fight, 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 fight. Break. They try again to push through. The sellers are here. My buyers are here. My buyers are here. If I can't get over this here, then there might be trouble. This is too high. Now, I break in under this IB. Now, right here, this shifts. This would have my teeth chattering. I didn't see this, but let me show you the short. And it sets up really nicely. I break here. I now know this is too high. This micro right up here. You can see a little box in here. I'm going to try to do this and show you micro structure. This is how I stay with it. Now, it's very easy if you don't have deliberate practice to get totally lost and confused. You really have to be able to think in multiple dimensions. Right here, you can see the fight and the micro volume here. Right here, you could see it here, here, here. And then you have your sellers into support. I come back up. This becomes resistance. And this is where these guys get in trouble again, these buyers. I see my seller. So now I know potentially this is too high. And now the VPOC moves here. This is very conflicted area. This is hard mentally to deal with because this says it's going higher. This says it's too high. Which one? See, this is a variable high volume node. Maybe this is support. So I come up. So chop, chop. Right here's your consolidation. And you could see it here. This is where the volume is. Right here, high volume. Now I'm going to put another line in here for you. I just want you to see this. I'm outlining these things so you could see them. So you can see the volume. In this little fractal microstructure, this is too high. Of course, who knows? This is too low. This here. So too high, too low. VPOC migration. Seller. Under the IB. Watch. Test. This is a short to TraderLab. Your stop is over here, and you're going to flush the financial you know what. And where's the stops? VWAP, mid, and then wherever. Let's just see what it does. There's your test. There's your test. And what does this look like? Let's come back to something I showed you earlier. Here's your test. Here's your test. Down. What do we got here? VPOC migration. Going to the moon, Alice, except for this. Breakdown. Here's your test. Here's your test. South. Does this make sense? Now we're current. Let me see if there's anything down here that's worth mentioning. Maybe. Yeah, it's two-sided. It's possible to take this out, to take out this low. And it's not a recommendation because I can't tell anything. You know, I just know that if I, with that short, I have levels out here and it could just come anywhere to this outside edge. It could come here. It could come, and this is support right here. So let's look at the low volume. It's an outside edge. If I get below here, I come here. The longs are in the market. Their stops are under here. Remember, approximately a 29 to 30% probability we take out this low, and now we have this. Remember, I was going for the short before. This is one of the things about TraderLab or trading. If you have statistics, how do you aim the barge? Well, you try to get an alignment, and then you still, there's a 72% 83% probability we get here. So for a short, for the IBF, you'd be very nicely scaled, managing your trade, and this has a high probability, as does the first hour's low, and there's all kinds of sell stops. If we get under there, well, if we get under here, I don't have anything really under here, I don't think. What's at the ETH low? Let me just look a little further here. Targets. This is possible here, but that's kind of a reach. The way I tend to trade, and I don't try to hit the ball out of the park, I just like to hit singles, doubles, triples once in a while. Occasionally I trip over a home run, but it's not, most of the time, 10, 15, 20-point rotations, if they're available. Otherwise, I take stops or get scales and take a stop, or whatever else happens. That's just the way it is. So this is where I'm going. And then it's trail, and if I get reversal in here, the trade would be over. So I'm just saying that's called the IBF. Questions, guys? Thanks for your patience. Hey, Craig, how are you? I see you're floating around in the TraderLab. Welcome. Good to see you in there. Any questions in YouTube? Please give a thumb up in YouTube if you're finding this helpful. Um, this is a methodology of market mechanics. It's about understanding how the market works. And there's a lot of ways to slice and dice the market, I think. I do it with volume. You could do it with other tools, but I will suggest regular out of the box indicators are probably not it. Understanding what the position of the buyers and sellers are, where the vulnerability is, I think that's what you need to understand or would be helpful. The fact that something crosses over here or crosses here, that doesn't mean I get long. It means I stay short, not because it crossed, because I know where the stops are. Write this down. Think like a retail trader. Don't act like one. What do? They look for their little oscillator to cross and now they take a long. Well, I have no reason. And it doesn't mean the market won't go up and take out the high of the day. Everything is always possible in trading. But if you think like a retail trader, but you don't act like one, then you would think that if you were long, what would you be doing? Where would your stop be? Is a question. Ask yourself, where might your stop be? Now, the market never has to get there, but do you find it interesting that we came all the way down and found our buyers, right? So we went up, came down, and didn't take out the opening swing low. Remember, this was the low. We missed this target on my short, by a smidge. Now what? There's more stops piled up here. Do you think, and I don't know the answer, but let's just think about it. Is the possibility stronger that we're going to go up from here, or we're going to take out the sell stops that are now accumulated under here? What do you think? Does your indicator tell you the condition of the market? Does it tell you you should be short? I don't know what it tells you. I don't have an indicator, so nothing's telling me. Order flow is telling me at the moment, when I see my buyers, they're being absorbed by the sellers. I've got sellers here. The buyers took a shot here. They got thrown under the bus. I have my buyers here. I got my sellers came in, thrown under the bus. I get my buyers here. I got my absorption here. Buyer under the bus. Buyers are fighting back, scratching, clawing. Buyers are trapped here, absorbed. Buyers here, no bueno. Sellers. Buyers here, absorption, under the bus. So far, not a recommendation. Why would I be holding my short? Statistic and stops fuel. If you're long, your lunch is churning in your stomach right now, potentially. Not a trade recommendation. Why would you hold a short? Because you're, quote, speculating that this is going to go. So let's see what happens. Are you guys tracking? Is this making sense? This is thinking in really how the market operates, the auction. Because what is the purpose of the market? Remember, the basis of even having a market is to figure out what's too high, what's too low, what's fair. Well, we might have found too high. We got one of our primary targets up on top, which I pointed out, the single called, I think it was 22 or 23. And now the longs are in here, and they're probably nauseous. They're nauseous because they're looking for the, quote, bull market to return. And yes, it probably is a bull market. But we don't trade that. We trade participant behavior based on the fractal time frame that you have vetted that gives you an edge and is psychologically aligned. That's what you do. Not necessarily what I do, because everybody is different. I know traders that are going to be selling this, buying this, selling this. I can't do that. It's not my skill. And I've done it. So I don't do it. Part of that is I used to do that in NQ, so that's a whole other animal. But in ES, what I talk about is where, by the way, have you ever thought where the profits are in this business? Now, that's kind of a loaded question because it's different for everybody. For me, getting short here down to here is what pays the bills. What is that? That's over 20 points if I get out under here. Even if I don't, it's a good payday, don't you think? Versus trying to do sell this, buy this, sell this, buy this, sell this, buy this. How many stops might you take in this? I have found, for me, if I put a trade on out here, a structured trade, my risk is the same to go for this as it is to do this, 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 this. Does that make sense? To be doing this, 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 this? I can use this to manage my trade, you know? And if I get taken out, I just ring the register and then I'm looking for my next trade. That's it. So it's up to each individual to determine where that edge lies and how to extract it. It's kind of important to know where your trades are, what you're trading as far as the range and the rotations, and also trade management. Does that make sense? Hey, please give a thumb up if you're visiting in YouTube. I'm getting a question about the IBF. If we come out the low, would it be a viable trade to get long under here? I'm going to say yes, but maybe not. let me look at a higher time frame chart. There was something I was thinking about. Well, there's a possibility. I mean, I think there's a reasonable shot that if we come out the bottom and revert back in, that we could get back potentially here if we come out. But if this thing does the Acapulco cliff dive, it could have much more, you know, because we are in two-sided trade, you know, and we squeezed out. We got to upside targets. So we can now take out longs from yesterday. I don't think we're going to take out yesterday's low a day, but that doesn't have anything to do with trading. I suspect more the potential is to take out these guys that are currently long. And then if we come out and exhaust, and to answer your question, yes, that might set up, and this is not a trade recommendation because it's very important that everybody understand. We anticipate what might happen. We can't predict anything. I anticipate we're going to take these guys out, the longs who have sell stops under here. And when we get into those stops, we might get some more sellers. And we don't know how far down, if we don't even know if we'll take this low out. So all that is up for grabs. If that happens and we come back inside and I see now I've got buy stops up above me, they become the buyers to come back here. That would be the same trade that we took from up top, the short that was up here. The same trade will set up from out here coming back potentially to here or wherever it might be. And this would be an area right here to be looking at. So if I come out here, I would be looking here and then maybe here, and then you got to see. We might only come here and start doing one of these things. Now, I don't know any of that. You know, I just go, well, maybe. Because the best, write this down if you haven't thought about this. The best you have in trading is maybe. It's just like gaming. The casinos, when they deal the cards are random coming out of the deck. Gamblers play the cards randomly. All they know is it's an uncertain environment and they got maybe. In the TraderLab, we focus on structured trades. And a structured trade is like a game in the sense of it has an edge. And it must be executed exactly the same way when it shows up. And we have to, in spite of how we feel and our fear and everything else, be absolutely consistent. When they play blackjack, they don't change the game because they lost on the last hand, the casino. Or they had 3 losers in a row. They are not going to now get, well, I'm going to move my stop to break even because I lost the last 2 or the last 3. They're not going to go, I'm going to micromanage now. Or I'm going to bail out if it comes against me. The present has nothing to do with the past. They are all unique events, assuming you have a statistical edge. Casinos build larger casinos, give you the cocktails, the ticket to the buffet, and maybe tickets to Adele because they execute a consistent process and accept a random outcome. There isn't a business that doesn't have overhead and cost of production. That's just the way it is, guys. If you want to be in the business of trading, you got to reframe how you think about this. It's not how you feel and your attachment to winning. Now, we all want to win. I understand that. There's nothing wrong with wanting to, but how you manage your business has nothing to do with your emotional state. You need to manage your emotional state, your attachment to outcomes. This is what undoes most retail traders, if they ever get to a place of even having an edge, because they don't understand what an edge is. If you have a statistical edge and you can't execute, it doesn't matter. You're still going to go out of business. So, and always think about the business you're in. We all start out in this business, erroneously, I believe, looking to predict what's going to happen next. It's logical, but it has nothing to do with the business. It is logical based on our psychological needs to be right, our fear of loss. It's the thing about that saber-toothed tiger out on the savannah. I don't want to get bit. So we act in a fear state of being careful, of being fearful. And I call that hide. You've heard of Jekyll and Hyde? Hyde is what lurks under our intelligent brain. It's that more primal thing that developed, and through, let's assume and accept, natural selection, those who figured out that you don't go grab the saber-toothed tiger by the tail survived. Those who didn't get that lesson were eliminated. So it's like a reptilian brain of sorts, and intellect and all the consciousness and the rest of it was built on top of that. So this system is operating, and it cannot differentiate between the saber-toothed tiger and, oh my God, I'm going to take a stop, and the pain and all that goes with it, right? So we need to become familiar with that, the mechanics of that emotional triggering, and you cannot eliminate it. So one of the ways to get control over this is to have statistics, because it makes this randomness that we live in trading tangible. In other words, there's a probability of X happening, X percent, that you're going to get a scale before you take a full stop. What does that do for your managing your fear state? If you take the IBF, that there's X percent probability in a day of a potential neutral day with 30% probability and two-sided trade, that you're going to get here because this has about a 72% probability, thereabouts, and there's stops under here. Does that help you manage the fact you want to jump out of your skin every time there's a little counter rotation, in spite of what might happen? Because every trade is unique, and we cannot say this won't come up here and squeeze out these shorts before continuing or never continuing. Can you accept that? You want to be a trader. This is what TraderLab is about. Understanding the things you have control over and the things you don't. You have no control over the participant behavior. You only have control over a vetted trade plan and developing the discipline to execute it. And over time, if you have an edge, it's not this last trade, it's not the next target, it's all of them. And what is your net? Does that make sense? Please give a thumb up on YouTube if you're finding this useful and interesting. Also, there's a link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord TraderLab community, take advantage of it. There's no cost for this. It is a serious community. It's about the business of trading. It's not romper room. And if you're looking to have a good time, we do laugh. We have a great time, actually, but it's serious. We're there to leverage our collective experience. This takes a village to do this. There's a lot of work, and the traders in TraderLab are leveraging. We're working together to all get better. You never get to the place where it's, oh, I got it now, and you get passive. If you're a competitor, you're always going to be looking to cut one tick off, 2 ticks off. That's even assuming you're profitable. To get more confident, to recognize behavior and not flip-flop with fear, to say, yeah, there it is. That comes from intentional practice. It's no different than a high-tier athlete who just takes the shot. They've seen it so many times. It's unconscious competence. How do you get that? Come to TraderLab, and then you drill and you take pieces and you start becoming excellent at it. There's no shortcut. You want to be in this business, you got to, as they say, pay your dues and invest in yourself. If you've been chasing the last hot thing and the only indicator you need and all that, everybody has done that, except it's called Trader Groundhog Day, where you wake up doing the same thing and it has no edge. Notice what happened here? Remember, absorbed, absorbed, absorbed. What about these buyers here? Sorry, Charlie. This is, remember Charlie the tuna? Now, right here, there was a buyer. There was a buyer. What happened here? Why didn't these buyers go higher? Because there's sellers here. Where are we trying to go? Remember this target there. Remember, I don't call trades. Do you understand? Can you understand why? The question for you is, if you're a developing trader, do you know why? Not if, why. If you don't know why, click the link in the bottom of YouTube. It's very important. Not to predict, it's about why, not will it. Why is it doing this behavior? Why, underline, might it go here because of the stops and because of this statistic? That's why. Will it? Clueless. Welcome to trading. See, the thing is, will it do it? Will it take these stops out over this swing before it gets there? It may never get there. And here's the other piece. What would you do if it does come above here? Because there's buy stops here and there's sell stops under here. Which one is going to go first? Sellers are being absorbed here and here. Buyers are being absorbed here and here. We have a box right here. One side's going to get squeezed out. Chances are, and I don't know which one, right? So my job is not to predict since I'm clueless. So I know if I come up here, they're going to squeeze out the sellers. And if I exhaust, I'm going to put the short back on again to come out here. If I come out here first, and these are not trade recommendations, and I see absorption and a reversal, this is called the IBF. It would be bing bang. I'm taking a long back to here, squeeze out these guys, and maybe come back here. It depends where this is at the time. I already know my trades. This is TraderLab. You would already know because you have a plan and you have to vet these. You know, what I do and what you do might be completely different. And it's not saying one is better than the other. There is no such thing. It's a statistical edge. There are traders that are going to be selling this, buying this, scalpeteria. And you know, it's not my thing, you know. And the reason it's not my thing is, and it's not that I can't get short here, but where am I going? I'm short from up the top. Where would you want to be short from? And then just hang out, you know, because if I get under here, it's going to be a nice payday, even better than it already is. Does that make sense? Tom, thanks for visiting TraderLab. There's a link in the bottom of YouTube. It'll take you over to the Bookmap Discord server. There you join, and they verify that you're, you know, not a bot or something. I mean, your name is Tom, so you're probably not a bot. And then you come over to the Bookmap Discord TraderLab community. You'll find there's a pin on the top, which will take you up, and you'll see a library of PDFs. There's like 60 of them-ish. You can download of these trades, structured trades, so you can reverse engineer them. But the fact of the matter is there's no such thing as plug and play. It doesn't exist in this business. There's no such thing when X happens, you do Y. It's a confluence of elements that need to come together. And that's why I have a library of webinars up there, some up to almost 5 hours long of real-time narration. The pieces have to fit together. For example, the short from up top is going for this. It can very easily take these, and why would it come up here? There's stops here, stops here, stops here. This is a weak high. Now, I don't know if it's going to come down here before it takes out the shorts. The nature of the market is to take out the weak side. we have two weak sides. We have this with the statistic, and we have buy stops here. One of these guys is going to get filleted. Often, it'll take out the weak shorts and then go take out the weak longs. Or it can just go down from here. You know, I can't tell you. What I know is you got a sandbox right here. And you could be looking at this, and then it's either, now, because here's what you got. You got buyers here. You got sellers here. That's what you got. When I say, it looks like a seller, doesn't it? They're absorbed. That's why there's a buyer. So when I say, you see this selling, those are aggressive sellers. Sell stops, sell stops. They're market orders. They show delta. But the reason you get a rotation is there's somebody on the other side. Could be this icebergs, you see. So we just are going to watch who is on first and who comes out. But this is what's next. So to sum it up, this is the target. This is the potential squeeze. I'm looking for it to come out here, and I'm looking for a long or not. It depends what happens under here, how far down we come, if we accelerate. But if we come out and I see stops and I see absorption, I see icebergs, and I see nothing much under here, then if I come back in, I'm taking a long. And then I'm looking to squeeze out the shorts. Write this down, everybody. The market goes up to go down. The market goes down somewhere to go up. The sellers in here can become the buyers at some point. So I should say the buyers become the sellers. The sellers can become the buyers. Let's watch. This is our next target, and I'm almost out of time. If you want some more of this and you're interested in what you're seeing, and if you think this might help you develop and become the trader you might want to develop into, I think you do yourself a favor coming to the TraderLab. And there's a lot of additional education. It's all available at no cost. Now, there's your absorption. There's your sell stops. Thanks for playing. This is when your broker sends you a gift basket. And we have some buy icebergs. This is very important what happens here. Let's watch it. Not a recommendation. There's our sellers. There's our buyer. This is Microstructure. We're going to watch this behavior right here. And this is not a trade recommendation. You got to watch this here, right here. Let's just see what it does. And I'm not suggesting anything. Let's just hang out together and visit. And these are not trade recommendations. Where's the stops? If this gains traction, the stops are now sitting above here, which would align with that for the scale. Not a recommendation. Are you guys with me? And I'm out of time. They're going to shoot me for going over time. Please give a thumb up in YouTube. Again, these are not trade recommendations. These are structured trades. You can learn these, reverse engineer them, and every trade takes stops. It's part of the joy, just the way it is. And the way this trade is set up, this is the potential target that gets scaled ahead of here. And if it fails here, you know, you're out of luck. Then squeeze, and not a trade recommendation. If you're interested in the TraderLab and what we do, it's a great community of like-minded traders. It's serious. It's about the business of trading. There is no holy grail. If there is, if you have it, come to TraderLab, clue us in. But in the meantime, as mere mortals, we just have to try to develop a business plan, anticipate what might happen, not predict what will happen, and go from there. The scale is here, not a recommendation, and then potential squeeze. Thumb up in YouTube, and remember there's no cost to visit the TraderLab. These are the PDFs you can download. It's all available at no cost in TraderLab. You can download these. There's a library of PDFs and a lot of additional education. There's absolutely no cost. Register, come visit, say hi, And please give a thumb up on your way out. And remember, these streams are available exclusively to Bookmap Discard TraderLab participants to reverse engineer, screenshot, and compare to your trade. So together we can all get better. Thanks again. And don't forget the thumb up. It helps the stream. Look forward to seeing you tomorrow. And thanks for visiting the TraderLab.